Hi there, Neil. Long time no see. Oh, let me know if you can hear me.
Hey there, Robert. I can hear you.
Hey,
Sorry, Robert, I am here. I'm just trying to get some people in and sort of chat thing out and stuff. Sorry.
No worries.
Nice to see you. How's things?
Everything okay? How are you?
Oh, well, I'll be great when it's sort of a little bit more like normal. Yeah.
Well,
I'm just letting a few people in. We got 40 odd plus registered. It always takes time. People join, come in as they come on. I'm going to put you up, as you probably can see on, if you see my screen here, I'm going to put you first.
no worries. We can give it a few more, whatever.
Yeah, we just wait. I'm recording this anyway, so the whole thing's going to be, you know, on our YouTube site.
No worries.
Okay, here we go. It's like a normal event. You wait for everybody to turn up and they all come at once. It's like, okay, where are we gone? Participants 15. It's Paul. Good old Paul. Hi, Paul. Welcome. Good to see you. Dan. Hi, Dan. Hi, Paul. We're just adding a few more people as they come on.
Right.
Good to see you. We're holding a relatively informal one tonight. We've got Robert, another Robert. Alan, I'm not sure if he's on yet. Garth's there. Susan's there. Hi, Susan. Welcome. And then Craig's going to talk about our Genesis fund, investment fund as well. So we're here to help. And presentation is going to be roughly 5 minutes. We can have questions and answers. We should have a chat room open that enables anybody to put any questions they've got in there. We've got a little poll running, which I'll set up once we get going. Hi, Dan. You all right? I'll turn my video on in a minute. I'm trying to sort of watch the screen. And we'll take it from there. Hopefully, this is going to be one of the last virtual events, or solely virtual events, we hold. We've booked in a couple for January and February with a view of hopefully looking at something March, April, where we can get back to what we used to do in London. And guys who know me and what we run will realise, you know, we used to fill rooms at the Brand Exchange, take over the club over an evening, 60, 70, 80, up to 100 people. And it was just great fun, great times. And hopefully, as I say, fingers crossed, toes crossed and everything else, we'll get back there next year. If not spring, certainly, I hope by summer. So that's where we're at. Robert, I know you've been to the Brand Exchange with us in the past.
Yeah.
And
a few times, actually, Neil.
Yeah. With what you're doing as well, obviously it's been, well, more or less everybody's been affected, but we'll get this underway. I'll get people in as they come along, if that's okay. Yeah.
Do you want me to share my screen?
Yeah, please. I'll
sure.
So let me stop sharing mine. So everybody, this is Robert from Racket Pal. Again, we've known each other for a while. I'll turn my mic off and I'll hand it over to you, sir.
Thank you. Let me share my screen. Everybody should be able to see it. Let me do this. Okay, cool. So everybody can see the screen? Well, thank you. I'm going to start, Neil, okay? Okay, I guess so. Okay,
sorry,
cool.
I'll turn my mic off. Yeah, please carry on.
Cool. So we are Racket Pal, and we are on the way to create the biggest racket sports community in your pocket. When I say racket sports, what do I mean? I mean all the sports played with a racket, and that's tennis, table tennis, badminton, squash, and paddle. Based on our research, there are more than 72% of racket sports players find it difficult to find the right sports partner. And if you look at that, that's a huge market worldwide of 1 billion plus racket sports passionates and players. Yet why is it so complicated and so challenging to find a suitable racket sports partner? Well, it's these 4 reasons, but I'm not going to go too much into them. It's mainly because people want to solve their issues fast, convenient, and with as few clicks as possible. There are very few people out there that want to play tennis, for instance, and they will go at the court and literally wait for hours until someone shows up. Instead, they watch Netflix instead. I mean, the OMS announced that people are playing less and less sports, and that obesity is becoming like a pandemic, and they announced it a while ago. So it's mainly because of these 4 reasons, because there is not one platform that unites all the racket sports players in one. And it's because people find it very difficult to find someone around their location and the same skill level and availability that they have. Therefore, we have created a highly engaged racket sports community of online players. These are a few screens. These are a few screens from our current app. It's available on iOS and Android. And what you can currently do on the app is find and filter your local players, chat and invite to them, keep track of your match results, but also you can find and book nearby coaches. We are working with 150 plus coaches currently in London. Find the clubs around you and keep all your friends in one. We are a B2C app. At the end of the day, we have to focus on user engagement through gamifications. For this reason, in Q1 2021, we have features launched such as rate and review other players, compete in local leagues, receive badges and achievements, so very heavily focused on gamification. We've launched the app 18 months ago. It's been quite a road until now, but we've got significant user traction with very limited marketing spend. As you can see, in May 2019, we've launched the app, and at the moment we have 10,000 registered users on the app, mostly in London. More than 55,000 messages sent through the app. It's one of our most used features. People are very happy and very engaged. More than 4.6 thousand matches created and 27% monthly active users at the moment. Well, that was about a month ago. The market landscape, as you can see, our competitors are focusing mainly on the B2B, very traditional leisure management softwares, meaning court booking, membership managing, invoices. We want to move away from that as the place is very crowded up there. We started with a B2C app, but we want to move towards a B2B digital community. And I'm going to go a bit more into detail on this. Bogdan, my tech co-founder, has created the app so that it can easily scale to SaaS and white label products in 1 week. And by transitioning to the B2B side of things, we can rapidly increase our user base and tap into annual recurring revenue. The plan for us is to expand in the UK and then target specific targets. The market is huge in the UK, 8 million plus racket sports players and more than 10,000 racket sports clubs. There are 2 main commercial monetization models. One is the freemium. Of course, we are a B2C app, and think about the dating apps. We offer limited feature, and then for extra features, you get to pay a monthly premium. And then the interesting one is the SaaS, where we offer the app to clubs for their own members, so that their own members can take advantage of the full spectrum of our features, so chat with each other, organize matches, tournaments, join the leagues of that club, keep track of their scores, etc. And this is a very interesting model that arose. Very highly tech-heavy team, as we are a sports tech app. At the end of the day, I myself am an ex-pro tennis player. Bogdan is a squash player. We complement each other quite well. I'm a marketing expert, and he's a very experienced tech lead with multiple startups. Have worked with multiple startups. Obviously, Oliver and David, our investor and our advisor. And lastly, we are raising 500K SEIS EIS. 120K we already have committed. as part of this round from our existing investors. So this is our second round that we are raising. And with this money, we plan to increase our user base to 100+K, obviously prove the two revenue models, and then a lot will go as well into product development. Thank you very much for your time. Any questions you have, I'm more than happy to answer them. Now let me stop share. Okay.
Robert, thanks very much indeed. We've got a chat open, so anybody wants to put any questions while somebody's speaking into the chat, then feel free. But we're quite happy just to open the floor up. So if anybody's got any questions of Robert, please feel free to unmute yourselves and shout out.
I'm seeing a question on the chat asking if we have already revenue. So we are pre-revenue in terms of the two revenue models that I presented. But yes, we are making revenue from B2B partnerships. There's been companies approaching us in the past 6 months, observing us that we are growing, you know, for instance, stringing companies, tennis equipment companies, badminton shuttle companies, etc. And they asked us, hey, can you advertise us on the app? And we said, for sure, for a monthly, you know, 150, 200 pounds a month as a trial, just as a test, because we are no advertising platform. But this shows the potential in the future for these types of partnerships as well when we increase our user base, you know, to 1 million users. So it has brought us very, very small revenue, about 2K a month, but it is not our main revenue model, yet it showed that there is potential even in the B2B partnership side of things. So I hope this answered your question. Should I take the questions from the chat or?
Robert, yes, please do.
Very
I mean,
seasonal.
unless somebody wants to, you know, well, yeah, answer those ones. If anybody else wants to have a chat direct, then fine. But yeah, please, we're relatively relaxed tonight, so you know, help yourself.
So turnover profit, I think I've already mentioned that. Very seasonal. It sounds seasonal. Tennis is seasonal, especially in the UK. So yes, but the other ones aren't, because besides paddle, but paddle is quite small at the moment, because even during summer, badminton, table tennis, and squash are played inside, mostly in indoor sites. So it just continues. Nothing changes for these three sports. Yet we are seeing a small seasonality in tennis, not as much, because we also don't have too much historical data. We've just launched a year and a half ago, and mainly the increase in user base and everything has been over the past 6 months since we raised the first round. That's when we reached from, 4,000 users to about 10K now, without too much marketing spend. But yeah.
Does anybody at the moment have any more questions for Robert? We can add these in later, again on the chat, or.
Well, one obvious question, I didn't think I was going to be the first to mention it, but I mean, sport tech is a terrible time to get investment given COVID at the moment. Is there any resilience you've got at the moment?
It's an amazing question. I love it. I'm going to contradict you, as we thought the same thing, but our app has been booming during COVID and after lockdown time. Obviously, during lockdown, there's nothing happening. No one is playing sports. Yet people have turned, because tennis was the only sport that could be played. You couldn't go out for a beer. You couldn't go out in a restaurant. You couldn't play any other sport, especially after the first lockdown. And we've seen a massive increase in user base and activity after the first lockdown, because tennis was the only sport back then that you could keep the normal distance while playing it without even actually touching your opponent. So we've thought the same thing. We're like, oh my God, it's going to be lockdown, and especially the second time. And we've had such an amazing feedback that even people that weren't playing tennis met on the app and actually joined the app so they can meet new people and can get out of their houses because they were incredibly bored or going a bit cuckoo. So actually it hasn't impacted us negatively at all. It's actually accelerated our growth, the first lockdown, and we're expecting the same thing after this one.
So a good time to move from a freemium model to a more paid model? Well,
we don't have the freemium model yet implemented. It's in our plan to do it over the next 3-4 months, especially after we raise the seed round. But yes, it's a discussion to be had then. So, but thank you for I was expecting this question. Okay, Jacob. Okay, I'm looking forward to
Can you, if you've got it there, Robert, as well, please share your deck
Of course.
and also your contact details, and that applies to everybody. I'll keep reminding people as you go through. This will be recorded. You'll be able to pick the chat up as well, so, and you can download the all the pitch decks from tonight as we go forward.
Oh, okay, so I can actually share the deck.
Yeah, you just go on to chat, like I put one up, the pitch thing for tonight. You can upload your file from your desktop and it will appear.
Okay, I think you should have received.
And then everybody can, oh, there you go. You've got another question, I think, from...
What membership base level will you start with the freemium model?
Yeah, hi, Robert. Sorry. Yeah, it's Yogi Kansagra here. Hi there.
Hey, Yogi.
Yeah, so I'm a tennis player as well myself, like yourself, so that's great. But yeah, just a question on the freemium model that you plan to implement. Like, what membership base level will you sort of try to kick that in?
Sure. So I've had multiple chats with a lot of tennis people, a lot of our users. I'm having constant, and I'm always asking them. Of course, when they are talking to the CEO, to the co-founder, they will never say, no, I'm never going to pay for your model. So they might be for your product. So they might be biased in that regard. But no one has actually changed their noses or changed their face when I told them, what do you think if we charge $3.99 a month, for extra features, and it's less than a pint. And actually everybody said that they would gladly pay $3.99, even $4.99. That's up for testing. We'll be doing a lot of testing next year when we start proving the revenue model. But $3.99 looks like everybody agreed on, and actually everybody was happy with. So that's probably our start. And that's what our financial estimations are also based on, $3.99 for the next 2 years.
So
3 years.
Introduce it sort of once it's ready, rather than kind of wait for a certain membership base to be hit and then introduce it.
We will be introducing it when the season starts, because that's when we plan to raise the seed round. That's also when we'll start putting more money into marketing, because we'll have a bigger budget. And that's probably April or May when we will start implementing the freemium model. And at that point, start testing it very, very much. We have already quite a membership in London, and that's where we will be starting to implement it. Out of the 10K users, I think 8K are in London alone. So, yeah.
Okay.
That's
thanks for that.
okay. Let me try to read the question first. And
yeah, Robert, I'll let you do this. Then what we'll do is we'll move on after this question. Anybody again for Robert?
For the year,
please answer this one, Robert. And then we'll run through again questions, and for the relevant people, we'll get them answered.
Well, Andrew, this is a very good question, and it would take me a bit longer to explain. And I think it's up to discussion, because I don't have 100% an answer for your second one. Let me answer the first one. We are happy to actually charge our users yearly as well. Probably they will have a discount. Probably we'll charge $3.99 yearly, monthly, or yearly times 12 and a 10% discount. So that's something we might do as well. But there is our long-term plan for this company is to become a sports data platform. A sports data platform you can become by having lots and lots of users that you can collect data from. And that's the shooting for the stars plan. If we want to implement this plan, we have to have user base, meaning we cannot afford to lose in the conversion of paying users 90% of them or 95% of them if we make it subscription based. For freemium, we will have everybody, we will have the data from everybody, and only a percentage of them will pay the premium, of course, but then we can still get the user base and a lot of it without losing them, because, oh my God, it's paid, I'm not even going to register, or I'm not even going to do anything. So it's because of our strategy and because of our long-term plans. But I'm happy actually to discuss this and hear your thoughts, as this is something I'm considering as well. If you go over a certain threshold in a city, if you have, let's say, 20,000 users in Paris, then you can make it subscription-based, because everybody around them will find a partner to play with. So I've heard opinions here, and I'm happy to discuss it. I would love to hear your thoughts. I hope it answered your question. Would you still get them and their data if they used your app for free for a month? Yeah, that's true, but you wouldn't gather, you would gather demographic data and not so much behavioral data and statistical data and other types. But yeah, you would be gathering quite a few data in the first month. Yeah.
Okay, that's great for now. As I say, please keep filling your questions in. I'll put
Thank
my
you very much.
Robert. I much appreciate it. Great to see you again, sir. And
I miss you,
hopefully
Neil.
looking forward to seeing
A
you
little bit.
physically in the new year, or the early
Absolutely.
part of the new year.
Sounds
We're
good.
going to move on from now. Robert, Pascal, I can see you there, sir. From
Thank you very
Plend.
much.
I'm
Thank
actually
you.
gonna be flying their presentation if that's all right, Neil. And,
Okay.
and then
Oh,
Rob's
well, there you are. Sorry, I've lost.
go for
Okay,
questions. That's
I'll
all
let
right.
you.
No,
I'll let you carry on. I'll turn my video off.
thank you very
Please
much.
carry on, sir.
I
You
will
should be able to
my
share your screen.
Magic. Okay, here we go. And how's that? I'm not sure I'm going full screen. Everyone see my screen? I'm going to take that as a yes. Okay, brilliant. Thank you. So I'm James, co-founder of Plend, and we are the UK's first social lending marketplace. Why do we need a social lending marketplace? Because at Plend, we want to basically ensure everyone in the UK who can afford a low interest loan actually has access to one. Sadly, that's not the way the UK market works right now. It is quick, but it is not clever. It takes just 59 seconds for traditional lenders to score borrowers into two categories. The top 26% are prime, and if you're in the prime category, then you are laughing. You have access to brilliant products at an average rate of 7.3%. Unfortunately, the majority, the 74% people pushed into subprime, get a much rawer deal, and they are accessing average rates of around 35%, and that's usually products like credit cards and overdrafts. What's really interesting is a recent study by PwC, which showed that there are 12 million near prime borrowers. These are borrowers who are just as reliable as prime borrowers, but due to either thin or inaccurate credit file records or minor blemishes and mistakes that may have happened 4, 5, 6 years ago, they're being pushed down from that prime bracket and are being forced to borrow at rates of an average 35%. COVID has only made the situation far worse. A load of stats on the screen here. Essentially, they're painting a picture of a borrowing market that is being pushed away from low-cost personal loans. They're being refused access to low-cost loans. More of us than ever, due to COVID, need access to credit, but the people who are being pushed onto borrowing further credit are being forced onto higher rates and shorter term solutions. So the demand is getting greater, but the opportunity for low cost borrowing is getting poorer. On the flip side of the scales, you've got the millennial investors, 73% of whom prioritize investments in social based ventures, but find it hard to find them. They want to see exactly where their money is going, and they want to know that their money is making a difference. At the same time, other platforms out there in the peer-to-peer space are giving returns of just 3 to 7%, very low rates of return. So what if we can connect the two? That's the idea behind Plend, the UK's first social lending marketplace. We're pushing aside traditional portfolios and auto-invest sliders, and we're allowing borrowers to showcase their pictures, their story, and their lending opportunity directly on our marketplace. And we're allowing investors to pick individual people with a story that they connect to, both as a person and as a lending opportunity, seeing exactly where their money is going and what it's being used for. Because we're peer-to-peer, we've massively reduced our operating costs. We don't have a loan book like other lenders. And this is what's allowing us to pass on these fantastic savings. Borrowers able to borrow at 10 to 25%, far lower than that average 37%, and investors getting returns of 10 to 25% as well, far higher than their 3 to 7% on peer-to-peer platforms. So part one of what we're doing differently here is this social lending marketplace. But there's another part too, because how are we going to find these near prime borrowers? How are we going to surface them to these future millennial investors? Well, it's a new kind of credit score we're generating at Plend for a new kind of borrower. We are leaning into the latest advances in open banking technology, partnering with Credit Kudos, who have a fantastic track record in essentially reducing default rates across the board from scoring methods to blending it with new open banking data points. In essence, it's a credit score that doesn't penalize you for mistakes you may have made 4, 5, 6 years ago, doesn't penalize you for having a thin credit file, but just judges you on a pure picture of your affordability right now. who's the team? Who's building this app? So myself, I've got 8 years experience building large-scale websites and apps, project management. Rob, my co-founder, also on the platform, is the financial brains behind the product. He'll answer all your detailed questions about how it works and how we make our money. And Kevin Allen is our CRO. So he's the guy who's building our bespoke credit scoring system. 26 years experience in peer-to-peer lending and open banking scored solutions. And he actually built the open banking scoring system for Experian as well. So really lucky to have him on board. Our revenue model is really simple. It's transaction fees. So we take 1% on the value of the loan paid for by the borrower, origination fee, 2.5% of all monthly payments paid for by the borrower, and 2 to 6% paid for by the investor, the provision fee on the value of the loan, which is paid back to us at Plend if and when the loan is fully repaid, which means we're very much on the hook at Plend for making sure that our new credit score does what it says on the tin and only surfaces lenders on the platform, borrowers, sorry, who can actually afford to repay their loans. So 8% on average on total over the total value of the loan for our revenue stream. The market is huge right now, 210 billion total value of personal unsecured credit in the UK. Here at Plend, we are looking to fund 50,000 loans by the end of our 5th year. So that's 250 million target share of the market. What have we done so far? So we've got initial users and waiting list of 500 plus ready to go for our beta testing, which is going to be opening at the start of next year. 3 founding members and 3 new hires that we're about to make, and a total funding raise so far of 50,000 from founders, friends, and family. So what have we done so far with that money? Well, we have developed our beta platform with initial integrations for onboarding and our social marketplace and payments. But it's the beta testing that we're currently raising for, that we're going to be running through January to May, 400 users, making sure that bespoke Plend score does what it says on the tin, training our algorithm, building the final integrations, and then launching in June and allowing people to borrow and lend at 25%, 10 to 25% on the UK's first social lending marketplace. Overall financial summary here, we've got far more detailed figures if people are interested, but essentially that's the path to getting us to 50,000 loans by the end of year 5, and you can see that we break even by the end of year 3. What we're looking for at the moment is pre-seed proposal of £500,000, 400,000 of that is for 20% equity stake in Plend, and 100,000 is debt financing to fund initial loans to create liquidity at the start of the platform when it launches, managed by an independent auditor. Where does that £400,000 go? It goes to the public launch of the Plend platform, originating 300 loans over 18 months. Our go-to launch marketing campaign, including investor and borrower referral schemes, part funding those initial loans, that debt financing scheme I was talking about, advanced features in the second half of next year, the secondary market, ISA, SIP, friends and family, debt consolidation loans, and it allows myself, Rob, and Kevin to go full-time, plus the additional employees, and gives us our legal FCA appointed representative status to go live. That's it in a nutshell. That's Plend. If you're interested, happy to answer any questions, and I'll call on Rob if the questions get too technical or financial, but that's Plend. Hope you liked it.
James, thanks very much. I think there's a couple of questions in there. Not sure that they're always easy. I think Andrew's asked one.
I'm just looking at it now. So I'll start from the top. So one of them was lending works, and then Twino.eu. So I think the main point to sort of highlight here is that there are other peer-to-peer lenders in the market. What they do is they aggregate investor funds. So they have their own loan book, and they originate those loans out to a multitude of borrowers. And it's very much, for a borrower's experience, a yes or no answer. So they aggregate the funds and then they originate them out, and that's pretty much it. The difference with Plend is the investor actually picks the underlying asset. You pick that person you're going to invest into, and you're also getting the exact same rate that the borrower is getting as well. So the gross rate is exactly the same. So it's a pure crowdfunding model as opposed to an aggregated loan book.
No, all of these are that, man. I just got to jump in because it really feels dishonest to say it. I mean, you said it literally 4 times. I counted. UK's first social lending over and over and over again, and it's just not true. I mean, There's like 10 sites that are doing P2P
for
loans.
personal unsecured loans, there's no one else that gives you a marketplace
That's
that
not
lets you
true.
pick directly.
I just listed 2 of them. That's just not true. What you're saying just totally isn't true. That's exactly what these websites are doing. So to keep saying over and over, you're the only one doing that, it's just not true, period. Just at all. So I don't know why you keep saying it. I'm actually really confused why you keep saying that over and over.
So we're not the first peer-to-peer platform, as I'm saying.
But you've said that 4 times in your pitch. So now you're saying
no, the first social lending. So I think social lending, the concept around there is you pick underlying assets. So there are products out there where you can pick the underlying property you invest in or business, but there isn't for personal loans.
No, man, that's what these
UK.
websites. Okay, I'm gonna stop disagreeing. That's literally what these websites are doing. So what you guys are saying is just completely wrong. It's not true. That's exactly what these websites are doing.
I'm happy to drill down the details. Absolutely. I think the other thing too is it's about the spread model too. So these platforms aggregate, the loans that originate on that platform and they put them out to borrowers. Plend, you get the exact same rate for borrower and investor. So it's a pure peer-to-peer model, and that's why we're saying social lending, because you actually have that actual connection, the exact same rate, and that exact connection with that person. I suppose the equivalent maybe is like a GoFundMe page or a Kickstarter campaign that you might see in the market where you actually back that campaign. You don't get that with other platforms. That's the key.
Yeah,
difference.
I mean, Andrew, like we're pretty sure about this. Like we're happy to kind of take you onto a separate call and kind of demo side by side what we mean by like direct social marketplace lending, where your marketplace as a lender is almost like the screen you can see here. It's these whatever 30 people, and I'm saying you, Robert, I'm clicking on you, I'm picking you to loan to, and that is not done by any of these other places that you're listing on there. And I will, I don't know what else to say apart from I'm 100% sure of that, because we've done our homework and we know who else is doing it, and there is no one else in the UK. There's a firm in Israel who's doing it.
Yeah, exactly. There's other teams doing it, and also in our founding team, so Kevin, who's our CRO, he's the first chief risk officer of RateSetter. So one of the earliest peer-to-peer platforms out there, and we're very, very certain this model hasn't been done before. In terms of that directness.
Like we wouldn't make that claim 4 times over, like if it was just wrong. Like it might be that some of the terminology is like putting us dangerously close to something else you're talking about, but it really is the first in the UK. Like I said, there are some Eastern European products that are doing it. There's Blender in Israel that's doing it, and there are some startups, I think backed by Google. Is it Rob in the US?
In the US, yeah.
There's no one else doing it in the UK.
But guys, using semantics to make your statement technically correct doesn't change that it makes you sound like you have not done your research. Saying we're the UK's first social lending, the fact is I do one search, there's 20 sites doing P2P consumer loans in the UK. So for you to say we're the UK's first social lending makes it sound like you don't know what you're talking about and you haven't done your research.
I understand that.
That's what I'm trying to say. So you might be saying something that's technically word for word correct, but when I search P2P lending for consumer loans and 20 people come up in the UK, it makes it sound like you guys don't do your research, don't understand your market, and are just making these broad, huge statements like we're the first. That's what I'm trying to say.
Yeah, and I understood, and I think that's the claim. We're not the original peer-to-peer, but we are the first social lending marketplace. And one of the key things with that, if you go onto our website, we've got reviews from 2 of the largest peer-to-peer bloggers in Europe, who've sort of exonerated Plend as the sort of initial, this first person-to-person connection as opposed to peer-to-peer, where you actually pick those loans. So I completely appreciate what you're saying. It's if you search peer-to-peer, 100%, there's tons of options out there, but I think one of the key things there, for example, like Zopa, who won the first peer-to-peer in the UK, they now have credit cards and they've got a bank license. They're operating very much a bank model, which is no longer really strictly peer-to-peer, but they still claim they're in this sort of peer-to-peer lending space. So it is, I suppose, semantics, but actually in actual reality and how the funds are actually moved around the platform, it is really the first social lending platform. But yeah, happy to provide more details on that. I think some other questions too. So James, you're asking if I'm not attractive. So SOAS. Okay, so with that, so the key thing is we don't have a loan book, we're not doing any lending activity. So one of the key reasons why we can qualify SOAS, because Plend is effectively an information platform. We provide the legal infrastructure, the regulatory infrastructure, but we don't actually originate or make those loans on the platform. and that's why we can still qualify. We have advance assurance from HMRC, just to confirm.
Okay. Folks, Robert, James, thanks very much. We can still run questions on that one. Let's move on for now. We can come back to this later on, but I want to get through everybody not as quickly as I can, but as within reason. Garth, are you there, sir?
I'm here, Neil.
Okay, now, are you okay with, do you need to share a screen or?
I can try share a screen. I'm not really good at this, but I'm too scared of.
If you've got a presentation down the bottom of your
okay,
Zoom.
Screen, key. There we go. See if it shares it. Share. Okay.
Sorry, everybody. This is Garth from Vantage Pubs. This is something that's close to my heart. One, the fact I drink in them, and I'm also interested in owning them. And at the same time, with the world, and especially the UK, in absolute turmoil and everybody closed down again, I think this is a fantastic opportunity going forward. So I'll turn my mic off, Garth, and I'll let you carry on. We can see your screen.
Okay. Thanks, Neil, and thank you for inviting me. And thank you, Craig. So yeah, quite right. I arrived in the UK 15 days ago. So yesterday was 14 days, and had this is for Dan Ballon, who brought up the COVID-19 questions. And unquestionably, the hospitality industry the world over is shattered. So having traveled 10,363 kilometers, self-isolating for 14 days, driving 2 hours in the rain from East Sussex to Berkshire to meet with the senior management of a pub company called Hall & Woodhouse, who've been negotiating to acquire our first pub through them. And successfully, we were awarded the pub, so very, very happy. Only to learn today that Berkshire is one of those counties that are now also a part of the lockdown. Nevertheless, not to bore anybody, my experience is developing, promoting currency hedge investments, specifically tailored to the South African investor market, allowing South Africans the opportunity to use soft currency, investing into initiatives that generate a hard currency return. Been very successful in the yachting industry. Give you a quick snapshot if that comes up. I've built over 359 luxury catamarans that sail all over the world. And what we did is created an opportunity for South Africans to invest in boats that we built in South Africa. They paid in South African rands, and we moved the boats over to the Caribbean and chartered those boats, fully crewed boats, generating hard currency returns for our South African investors. I did that for 17 years very, very successfully, and made people or investors a lot of money. I have a partner in Vantage Pub Company, my girlfriend, my partner, who's British, who left the UK some 16 years ago, went to South Africa, and she built up her own restaurant group called Thai Cafe and Erewhon. It's Thai Cafe, fast food, sit down, Thai food, and Erewhon more five-star type of dining. Was very, very successful in doing that. What she had done though is looked at the UK pub industry, because her grandmother and mother came out of the British pub industry, and she started 3 years ago looking at the money, came back to the UK, and we started to do a due diligence, and we reviewed over 300 pubs in the UK, and during lockdown, against our investment checklist, with the intention of inviting South African investors once again to invest in the Great British Pub. And we have very, very substantial investors in South Africa that are very keen to put money into our vision for our branded pubs. Then Neil said, well, here's an opportunity. Let's put it out to a couple of people. What we've done. I'm gonna jump a whole bunch of slides here because I don't think they're appropriate. And I'm just going to cut to the chase here. Our business model is quite simple. We're looking at initially getting involved in tenanted as a tenant into the tenanted pubs with the big breweries, Drinking and Star, Fuller's, and EI Group. Then moving into free of tie type of deals with Wellington, and then of course completely freehold pubs with a kind of 6-year exit strategy, something similar to what the guys at City Pub Company did at around about 2008. They got involved in doing exactly what we're doing. We didn't know it at the time when we were putting our business model together, but nevertheless, they went and sold their business for £93 million after 6 years. Our strategy is also, we would look at an AIM or trade sale within about 6 years. So what we've done is this very, very exhaustive research of, where the Great British Pub comes from, where it's at, and where it's heading to. It's we're looking at food-led. We're not wet pubs, not a bar go drink place. It's all about the food and integrating our experience within the yachting industry into the pub industry, pub restaurant type of industry. So our investment to date is around about £212,000. A lot of money into research, and of course then securing our first pub, which we've now secured in West Sussex, and take occupation 1st of February. Now the idea was then to allow our South African investors to come in, and we would scale the business quite rapidly, looking at acquiring a pub every quarter, so kind of like 4 pubs a year, trying to build it up to around about 17, 20 pubs by month number 60, and then looking at the exit strategy. So it's really from a funding perspective, it's inviting our South African investors to invest in the pubs and generate a return. The returns are pretty simple. Whether it's somebody from South Africa, America, UK, Dubai, we don't care. What we've done is, in our financial model, is quite simple. We did it with our yachts. We've done it with stainless steel tank containers. What we've simply done is we built in a 20% return. So we're saying to an investor, okay, we're creating an opportunity right now. We're saying £120,000, and with that money, we will go and acquire our second pub. Against that £120,000, that investor or grouping of investors, up to a maximum of 10 investors, will receive a 20% return on their capital, paid monthly in arrears. So £2,000 every single month is worked into the overheads. And so obviously what we've done is we've ensured that the businesses that we are acquiring are established businesses. The one that we've just acquired has been in business for 20 years. So we've acquired that. We have the audited financials. The reason that the owners are selling is legitimate. They've been in it for 20 years. They're retiring, and they were getting out of it before COVID arrived. So it's very simple. We're giving a 20% return, and round about month number 72, we're looking at an exit strategy through the AIM or a trade sale. So yeah, the offer out there right now, I guess, is anybody want to get involved in the British pub industry, £120,000 will buy you 20% equity in the group. So you'll be considered a founder of the business, and you would help us sit on the board as an NED or be actively involved as an investor if that's what you want to do. Yeah, so that's about it. I'm sure that the British people certainly know everything about the pub industry. So you're welcome to ask me questions. And I do have my backup here. Her name is Karen. So Neil, that's all I have to say, mate.
Garth, that's perfectly straight to the point. And as I say, you're going to hear from not you necessarily, but from Craig earlier or later. We're looking at this concept, which is why we like Garth so much. The best time to get involved in an industry is when it's on its bum, to be polite. And we ourselves are interested, and me personally are interested in this. So if there's any guys out there who want to ask some questions at the moment or put them in chat, the mic's open, so please feel free to either put something in the chat or just shout out. I'll shut up for a minute. Dan, do you have any comments? We normally appreciate your comments.
Yeah, it's what I was going to, well, I do, but I almost feel it's one of those things where you start and you kind of, it opens up a whole set of questions, really. Because I mean, pubs are all really to do with, and maybe I missed it, but pubs are all to do with typically alignment and breweries at the end of the day. So it kind of comes down to the due diligence and making sure when you're buying these breweries, buying the pubs at the end of the day, and how you're gonna, because the breweries screw the pubs over big time. So there's a whole set of questions around.
You're right, Dan. On the tenanted deals, like with the Hall and Woodhouse, you have to buy absolutely everything through them. But it's a good stepping stone because it's literally risk-free. The type of leases that we would want are 20-year type of leases without any time that we can determine for ourselves which brands we want to stock. But we just thought we don't want to be clever buggers just because we've been successful owning our own restaurants and yachts and things like that. So let's humble ourselves and let's crawl before we start walking and sprinting. So we just thought the most plausible thing to do would be to tie up with what we believe to be a family type of orientated brewery, which Hall and Woodhouse are. The rest of them are also great. I mean, they all offer pretty much the same. But it comes down to the numbers, and we've crunched the numbers, and that's what we've done all our lives to ensure that we get the returns that we're looking for. And at the end of the day, it's quite simple. It's a minimal 20% return. One would like to say guaranteed, Dan, but that gets a lot of people upset. But we certainly can back up a guarantee of 20% return. And the upside is scaling really as fast as we possibly can. And within reason, of course, and then looking at the exit strategy, it is amazing what is happening in the British pub industry right now. Absolutely amazing what some of the companies are doing. You have the Scottish beer giant that has this unshakable belief that they're hitting this huge expansion trail, and as Neil said, unfortunately, out of chaos, really good opportunities present themselves. We as a family, we made a decision that we wouldn't go pursuing distressed assets. Our moral compass kind of told us, that's a bit mean. But the reality of the matter is there are so many distressed assets out there, and of course we would, where we can help people, we would like to get involved in helping them. But Northeast Pub Company are planning 157 new sites next year by the end of 2021. which is amazing. There's a lot of activity because people see the opportunity. They really do see the opportunity, and we likewise see that opportunity, and we are capitalizing on it. The thing is, we put our own skin in the game, and we're just happy to invite anybody that would like to come along for the journey and share our vision and are comfortable with a kind of 20% return, with the upside being an exit strategy on the alternate investment market. It's quite exciting. I mean, we do know what we're talking about. We've been doing it for 36 years. So yeah, Neil, is there anything else you want me to say?
Garth, I think that's great for now. Thank you very much indeed. We'll move on. Again, anybody's got any questions for Garth going forward, just drop in the chat. We'll have a little fly around at the end. And I would now like to introduce you to Susan Kabani, if you're there, Susan, from Ugenie. You need to take your mic off. Hang on a minute. I could probably do that for you because I can't hear you. There we go.
There we go. Hello.
Right, I'll shut myself down. Are you okay? Or do you need to share a screen, or
yeah, I'm going to share a screen. So I'm just going to get my presentation up, and then I'm going to share my screen with you guys.
Okay, lovely. The floor's all yours.
Thank you. So you guys can all see that?
Yeah, we've got that. Thanks very much.
Perfect.
All yours.
Okay, great. So hi, everyone. I'm Susan Kamani, founder and CEO of Ugenie. Ugenie is a community-focused software company making technology simple and secure for non-technical membership-based businesses and community leaders. So why is this important? Well, even before COVID, for administrators and community leaders, especially of really small niche communities or businesses, it was lonely, difficult, and challenging to maintain, manage, and grow their membership base or communities. But by having real-world touch points, there was still a way to keep their communities connected in some way. Now with COVID, the challenge of putting everything online, these non-technical administrators have been forced to do this quickly and using a variety of tools and technologies to replace their traditional activities. Here in the UK, where there's still a large digital skills gap, it is even more daunting. And in the past, these community leaders have been using Facebook groups, LinkedIn, and Slack channels as the easiest choice for connecting their members digitally. But with data security and privacy at the forefront of members more and more every day, and with the unreliable algorithms of social media platforms, where there's no guarantee that members will actually see the information, the mainstream platforms are no longer the most attractive option. My Facebook profile was suspended on the day I was running my very first event in my Facebook group, and I still don't really understand why. Shanaz Latif represents a growing number of CEOs of small businesses that are looking to move beyond Facebook, LinkedIn, and social media, but don't have the technical skills to necessarily build their own sites or work with any of our competitors. So this is where we come in. Ugenie is a dedicated platform for membership businesses to build, grow, and engage with their communities. In the last 3 years, we have worked closely with our beta testers and early adopters to iterate Ugenie to serve this market. We are now primed and ready to grow and become the go-to trusted platform for community leaders of niche communities to grow, scale, and more importantly, manage and retain their customers online. How do we do this? Well, we aim to have 3 tools, 2 of which we've already built. Ugenie Hubs, which is our web and app community platform, and essentially serves as a private LinkedIn for the brands that work with us, is an easy to use platform that you can create directly from our website and brand and curate for your own community. Ugenie App, which is our newly launched white label platform, allows larger brands with bigger budgets to create their own copy of Ugenie for iOS and Android app. And Ugenie Data, our community insight tool, which we are planning to build and develop next year, is our up and coming data analysis tool. Although Ugenie Hubs does have a basic level of analytics where users can track and measure their community and member behavior, we now want to take this to the next level and turn this data into actionable insight and recommendations for these small community administrators. So who do we work with? We work with membership-based businesses, professional associations, and now a growing community of coaches that are using Ugenie for a simple to use e-learning and membership platform. Our revenue model is simple. We have 4 streams. We make revenue from subscriptions from our current web and app platform. We also share revenue with a growing majority of our clients in which we share in their success. So when they sign up a new member, we get a %. We have our white label offering, which has a £3,000 setup fee and a higher monthly subscription rate. And we're going to launch an affiliate marketplace where we match the right products with the right communities with the unique insights that we're gaining from the platform. The market opportunity here is huge. We're an online SaaS platform focusing on community and membership-based businesses. In the UK alone, our serviceable market is 446 million, with a global market of 6 billion. These numbers also only reflect organizations which are registered businesses and does not account for the millions of businesses like Shanaz, which are currently leaving mainstream social media platforms for a variety of reasons, from control to privacy. These community owners and administrators are tired of being at the mercy of social algorithms and want something they can easily understand and afford, which is fit for a purpose. The Ugenie you see today is not where we started. We've done over 3 years of research and customer validation. We've pivoted, we've changed, we figured out what our insight is and how we can best serve our customers and how we're different from our competitors. It can seem a very saturated and complex market. However, there are very few players that are targeting these small niche communities with the plethora of services that we're offering. Further, we believe we're the only one offering this unique partnership revenue model, which is becoming a very popular choice. And as an iteration, to repeat, we're taking a percentage of what our customers are making from their membership-based businesses. The team is not just me. We have a team of experienced people which come with a lot of experience building businesses, understanding technical risks involved in building SaaS platforms, and most importantly, understanding community and membership businesses, with me being at the heart of it. We're also very fortunate to have an experienced board who is actively involved in our business. This year, we have reduced cost, launched 2 new offerings, and are on the way to tripling our revenue through referrals and organic growth, and are now primed to grow. To grow, we need £250,000, which will go toward 1, brand and marketing. Quite frankly, we've done very little marketing to date, with our customer base growing organically through referrals and recommendations, hiring a COO, integrating key features being asked by all of our clients and other people who are trying to choose between us and our competitors, such as payment integration, live streaming, and of course, building Ugenie data, and serving our existing and newly acquired customers. With all of these things, we believe we're going to be in a strong position to raise a seed round in 12 to 18 months, or position ourselves for acquisition or merger from one of our larger US competitors. Again, we're Ugenie, a community-focused software company making technology simple and manageable for non-technical community leaders and small businesses. Thank you.
Well, that was great. Thanks very much indeed. Okay, questions, please, from people. I don't know where we've got to. I'm losing my chat thing here. Does anybody have any questions for Susan at the moment?
Hi there. Sorry, it's Yogi Kansagar here. Hi there. Yeah, so just a question. So you are positioning yourself differently to like, so is it a Facebook of like community, I guess community projects or community businesses, as you said? Is that what it is? Is it like equivalent?
I can clarify. It's membership-based businesses. So imagine you're paying £10 a month to be part of a membership. These businesses have to build an online offering, a way to serve their customers, take payments. So we serve those guys. We serve as the backbone of professional associations, so large associations that have members that they need to communicate and serve. And Facebook used to be, for the professional associations and the membership businesses, actually, they tend to try to build their own software, but a lot of them still don't have the technical ability and end up going to try to build some sort of web integration. Our web platform can now do that. The growing group of community coaches that are coming onto Ugenie are the types of people that were using Facebook groups to talk to their customers or members, but it just no longer fit for purpose. So they're starting to take that first step outside of social media platforms, but they don't have big budgets and they also don't have a lot of technical expertise. So hopefully that clarified it.
Right, okay, sure. And
also we're being used as an MVP for a lot of network-based businesses. We're actually building 2 white label versions of our platform for other startups right now that are going to use our white label to test their business model in a lean way and try to prove that they can get traction. So our white label has been a very interesting addition to our portfolio of products.
Right. Okay. So it's kind of like Facebook groups and things like that, but a paid version of that on
Paid and private. So you can
Yeah.
curate it. The data is owned by the brands. It's co-owned by the brands, and it can be integrated into their websites. So yeah, if you want to just, it's a private version of Facebook or LinkedIn groups.
Right. Okay. And in terms of like number of members that you could have, like, on the platform, I guess it's kind of as many as you want, or yeah.
Yeah, so our model is focused at communities of 500 or smaller. However, the technology can handle millions of users. So if we had a larger business come along that had 100,000, 10,000, however many users, we can handle it.
Right. Okay. That's great. Thank you.
I think there was a question in the
Yeah,
chat.
there is a question.
Sorry, can I just
Please.
have one more question?
I'll go on.
You didn't mention any SEIS or anything like that, so.
Oh yeah, sorry. So our SEI, we have raised in the past, our SEIS is complete. We are now EIS eligible.
Okay, so you've done 150,000 and then.
We've raised £260,000 to date to build the platform to this point. And now we're raising our growth capital to get it out there.
Right, so this is the next 250.
Mm-hmm.
Okay, thank you.
I think there was
there's a question on the chat, Susan. I don't know if you want to.
Yeah, so the level of revenue, we are going to end the year with 3K annual monthly revenue. A lot of that has come toward the end of the year because we launched into the market at the end of 2018. So we're still quite fresh in terms of how long we've been in the market. We haven't done any significant marketing. It's been all through word of mouth and recommendations as we build a product. COVID has affected us just like everybody else. So we have lost customers this year, but we've also replaced them and are up in terms of customer profile. We're also making more revenue per customer because our offering has grown. So longer answer to your question is about 3K a month.
Okay, sorry, just thought of a question. So what's the equity for the 250, or what's the sort of how's it working?
Yeah, it's 2 million pre-money valuation. So we're giving away 11%.
Okay.
And we have 20 of it committed and another 30 hopefully committed by Christmas. So we've got the first 50 probably done before next week.
Okay, thanks.
Great. Well, thank you guys so much. If you have any questions, I will obviously share my deck, but feel free to reach out to me. And my other final ask is if you know of a business or a community or membership-based businesses is looking for a new home, please send them our way. Or if you want to partner with us, we're looking for other platforms for key integrations. We're talking to a CRM, another startup who has a CRM. We're going to integrate Stripe. So we're not about building all these new integrations. We want to work with other companies that already exist, whether they be the established Stripes of the world or other startups. So feel free to reach out if you feel that your platform, your technology can integrate with ours.
Susan, thanks very much indeed. That was great. In fact, I'll touch base with you early next week because I've got something I want to talk to you about personally. Now, I'm going to introduce my business partner from Dubai. Again, Susan, thanks very much. We're going to finish this off. Amongst the other things we do, and we have done over the last 3 years in the city of London, when we've been allowed to, is introduce startups to founders and founders to investors. And we have a private equity fund, which we set up for this purpose. And so I'd just like to introduce you to Craig. You'll probably play a quick video. I'll shut up for a minute. And again, so Craig Martin, my business partner. Hi.
Thanks, Neil. Thanks, Neil. Nice to see some familiar names on the group tonight from our events in London. Just to reiterate what Neil says, my name's Craig. I'm his business partner. I'm based in Dubai. Been here for going on 20 years now, and we set up the Exponential Asset Management and Exponential Genesis Fund to invest in early stage companies and align that with a strategy to cherry pick the best companies from our events to invest in going forward. There is a short video. Apologies for those of you who have seen this before, but I will make us go through it one more time. It explains exactly what we do in the fund from here.
Welcome to the Exponential Genesis Fund, a private equity fund. Welcome to the Exponential.
Right, I'm just going to double check. Neil, could you hear that?
Yeah, heard it. All right, Craig. Down here, heard it.
Yeah, thanks, Dan.
Welcome to the Exponential Genesis Fund, a private equity fund managed by Exponential Asset Management, an FSC-regulated fund and asset management company. A private equity fund with a difference. Conventional entry levels for private equity funds are upwards of $100,000. Exponential is just $10,000. What do? Simple. We invest in companies that have an exit strategy already lined up, with a liquidity event on the horizon. Typically, this involves covering the significant corporate costs of the company listing on the stock exchange. In doing so, we secure stock at a preferential rate. Essentially, we help put an initial public offering in motion and safeguard that the process is completed. The core markets for implementing this are Nordic and London. What does this mean? Exponential invests into portfolio companies at very low entry point and secures its significant profit when the stock becomes publicly traded. The execution period for this is 3 to 9 months. How can I invest? You can invest directly by filling in the relevant subscription forms. www.exponential-funds.com. Interested to find out more? Come and have a chat to our director. We are very sociable.
So that's a snapshot of what we do, and what we're looking to implement moving forward with further early stage companies in the coming year. I think this year's been different for everyone concerned. It's been hard for startups, and additional to what we do is also the syndication, like Neil touched on, of funding rounds for companies alongside the fund. So I think next year we'll be certainly more active in some earlier stage companies, and additional to taking them straight to the capital markets will be to do some private equity syndication from the Middle East and from Asia going forward. As a group, we've made some significant inroads in the previous days going by there to partner with a publicly listed company with similar interests and expansion plans for Asia, for the fund, for exponential events, and for our upcoming wealth management business, which facilitates funding across the board for all sorts of early stage ventures, be it debt and equity. We did this really so that people who are keen to invest in early stage companies could participate in the fund. And for example, tonight you might like 2 or 3 opportunities and would be a bit unsure where to place your capital, then you could place it in the fund, and we can then invest across those companies from there, and you get exposure to all those companies with a little bit more surety of spreading your capital from there, and not having to work with 3 different management boards and shareholder meetings, etc. There we would do it all on your behalf. So that's us. I'm sure most of you or many of you have had a chat with us before. If you need to reach out to Neil or myself, by all means do so. We're always open to have a chat. And if there is any questions, I will take any more questions. I'm happy to answer any questions that you guys have or any queries that you have.
Craig, there's a question from Garth. We'll cover that in a minute. What I want to do is run out to the guys and girls who are left, just to simply introduce yourselves to, if you're a startup or if you've got an investment objective. Either way, I think Georgina's around. Georgina, do you want to take the floor for a minute and just have a chat with everybody?
Evening, I'm Georgina Bowman. I'm a very pre-stage startup looking to raise my first bit of investment to get my MVP built. I'm looking at building my team as well. My app is for the shooting community to connect the shoots. It's for marketing. It will be to market, organise and connect the shoot whilst allowing brands to target their ideal clients and raise money for conservation. Thank you.
Okay, that's great. Thanks very much. So are we looking at like different game shooting or clay pigeon shooting concept, or what's the
on my website? My prototype demonstrates it through game shooting, pheasant shooting, but it's vertically scalable through clays, pigeons, crows, stalking, gaming industry for shooting games. It's scalable long term through the leisure industry, through other leisure pursuits. It's globally scalable too. Okay.
And your markets would be, I suppose, the people who enjoy that side of thing, plus also corporate hospitality. Is that correct? Or
there's 600,000 people shoot in the UK and 16 million in the US.
Really?
Wow. The UK market worth and opportunity is 2 billion, and in the US it's 23 billion. That doesn't include doesn't include the rest of Europe, Africa, Asia, or the gaming market, which is worth billions.
Wow. Okay, thank you very much, and we look forward to seeing you in 2021, hopefully physically.
I've secured funding from Innovate UK to get me investor ready. I've got my business plan in place. I've got my 5-minute pitch, my 1-minute pitch. Probably I should have done my 1-minute pitch now and failed. I've got a group of 8 on-demand advisors from the shooting industry, gun makers, gun brands, shooting sporting agents, game chefs. As my on-demand advisors, I'm being coached by Heights Sports Accelerator. On my second time, I had to be more ready for them this time. Hopefully I'll be told by Christmas I will be on there. And my tech advisor in the background has brought 3 unicorns to exit.
Oh, brilliant! So you've been taken under Innovate UK. So you've got some cash from them, shall we say?
Yeah, RTC North have been using Innovate UK funding to get me investor ready over the last 3 months. They've told me what I've achieved in 3 months is what most people take 8 to 9 months to do. And I've also had funding from the IP office and had my IP audit finished and filed yesterday. And I own all my IP for my domain, my website, my prototype, my sketch files. I'm ready to go, just need the money to get my MVP built.
Oh, brilliant. Well, look, let's talk in the new year. I think that sounds great. If anybody's got any questions for Georgina at the moment, please feel free to ask them. I'll shut up for a second. Anybody there? Dan, you're into I don't know what you're into.
I'm not into shooting, but I know they're a very loyal customer base. So, and I don't think that they're a segment which can be should be leveraged more, I think, and upsold more.
Correct.
I think it's a certainly interesting concept that we don't normally get every day.
My background was I by accident I ended up my degrees in food manufacturing, management and marketing. I retrained to be a massage therapist 4 years ago because I live in the Peak District and saw a whole of the opportunity for where we live. But by accident, I ended up being a sales agent for shooting hunting clothes for 2 years alongside the massaging, and could see quite a lot of needs and requirements within the industry. It's not safe, it needs to be secure. There's lots of antis, there's lots of reasons to want to be secure. There's a bad problem with game meat going into landfill, and quite a lot of my hobbies and interests through food, comes back and does a full circle, and that's how I ended up coming. I got a cheese. I got a cheesy moment when I was out walking our hills and worked out I needed to create some. By selling the clothes, I saw it was a very inefficient way to market, and my app creates what I was pulled into quite a lot of boardrooms whilst being this sales agent, asking how we get to the ideal client, the customer, and I got that light bulb moment, and that's why I come up with my idea.
Okay, perfect. Well, look, Georgina, thanks very much indeed. Craig, there's a quick question for you from Garth, re the fund, I believe. If you want to, I'll just shut myself.
Oh, hold on to find it. Funds domiciled in Mauritius, we are at 2.5, and in terms of investments lined up, we do have several portfolio companies on the horizon that we're going through just now. Obviously, we're a bit cagey during the whole COVID period, moving into various a lot of companies had to pivot basically, and it was a bad time for any company to be looking to go public, because roadshows etc. are a lot harder to do. So there is stuff lined up for Asia, actually, for the new year as well. That answers your question. I've got another one that's a private message. Oh, someone else just asked me a private message. That's fine. I think that was it, Neil.
Okay. Right, folks. I mean, we're here. Anybody who wants to ask anybody else any questions or interact, we're open.
Sorry, Neil, sorry, a quick one. This is Yogi again. And so I didn't know what the format was for tonight. I've been on one of these before, but so Georgina was kind of doing a little bit of a soft pitch.
Oh, so you want to? Yep. Okay,
no
far
problem,
away.
No problem. What it was I actually have my own pitch, which I didn't know that. This was also a. We can't do the 5-minute one, but introduce yourself to everybody. I'm a property investor and investor in EIS as well from time to time, and also I'm doing my own app as well. So I've actually spoken to you, Neil, in one of the live meetings just briefly. But I guess I didn't know the format of it. So I have a project called Room for Rent, which is a app for renting, similar to Spare Room and Roomster, another app for room renting or houses of multiple occupancy and things like that. So I will be contacting you, Neil, at some point to maybe do a pitch on one of these events for that too.
Yogi, that's great. I mean, let's say when we get back to quote normal, we'll fill London events at 120 people or so. Yeah, I think going forward as well, one of the good things that come out of COVID is that everybody now is acceptable and well, basically accepts virtual events, which means that not just we can hold an event in the city each month, but we can hold a virtual event and then capture people from the Middle East, Thailand, or Asia, Hong Kong, Singapore, other parts of the UK, the US, and everything else, depending upon time. And I don't think that'll change. I think you're going to see a hybrid investment raising market going from physical events to hybrid to actual online, and it's great. And all we want to do is just build a community and help everybody. That's what we do. We have done from the start.
That's great. Just to let you know, the app is actually an MVP form. It's actually a lot more than MVP, and it's available on the Play Store and the Android anyway for anybody to want to check it out.
That's great. Can you whack me something over personally? My details are all on the top.
Okay. Yeah.
thing I've shared, and we'll work together going forward into hopefully a new 2021.
All right, great.
Yep.
Thank you very much.
Thanks. Anybody else want to introduce themselves or have a further conversation? No? Okay. Right. Well, we'll close this down now. Very much appreciate all the presenters tonight, the founders and the people who've turned up. Dan, I'm really looking forward to seeing you actually in the new year. We can actually touch base properly. And also my other friends are on here and my other investors and such like. All I can say is it's been a strange one, and I wish everybody a really, really good Christmas and hopefully a much better new year.
Thank you very much, Neil.
Thanks, Neil. Much
Thanks,
appreciated.
So, again, thanks everybody who's turned up. Yeah.
Thanks, Guy. Have a Merry Christmas and a Happy New Year.
Cheers.
Yeah, absolutely.
Cheers, Neil.
Thanks,
Cheers,
Neil.
cheers, guys. Bye-bye.
Cheers, folks.
Bye.
Take it easy.
Neil, I'll send you a link, yeah?
Yeah, okay, mate. Yeah.
Oh,